Ethereum should be 55% lower, is an article that was recently published in Markets Insider. This article references a JPMorgan strategist who says Ethereum's network activity and close competitors lend him to believe the fair market value for Ether is $1,500. So I read this article, and of course, it was a bit of a shocker to me, but I was also intrigued. So I decided to really dig into this and find out if those claims hold true. So whether you hold Ethereum or not, this will be a really helpful video for you to use in the future to determine network activity and the value of various cryptocurrencies, something that is very hard to do. Also, I spent far longer than I care to admit digging up data to pry out the truth here for this video, so go ahead and hit that like button for the sake of research, and let's go ahead and jump right in. We're going to first look at this article and the specific claims that it makes, and then we'll dive into my research on the topic. So hopping over to the article, Ether should be 55% lower and is facing tough competition from Solana and other blockchains. Here's where it says, Ether's fair value is around $1,500 based on measures of network activity. A JPMorgan global market strategist has said that's roughly 55% lower than Friday's price of around $3,470. So Nicholas, he told Insider that Ethereum's network is less attractive than the current price suggests, and it's facing competition from other blockchains like Solana and Cardano. We look at the hash rate and the number of unique addresses to try and understand the value for Ethereum. We're struggling to go above $1,500. We're going to really dive into both of those things and dig out the truth here. There is a question mark here. The current price is expressing an exponential increase in usage and traffic that might not materialize. He's saying that markets are future facing, so the price today is based on the potential value in the future, and if other projects like Cardano and Solana are taking away from the potential future of Ethereum, then today's price should be lower per his research. We have a couple more things here. This is a counterpoint. So this Jack O'Halloran, he says Ethereum is likely to remain the dominant decentralized finance blockchain, especially given upcoming network changes to proof of stake, and the vast majority of smart contract developers are building on the Cardano ecosystem. Now for the fun part, let's dive into the data. So we're first going to look at hash rate and how Ethereum stacks up to competitors, because this was the most clear citation in this article as to why Ether may be overvalued. After that, we'll look to other network activity data points and social data points as well to help build a better picture here. So first off, I find it odd that hash rate was pointed here as the key metric. While it is a useful metric, it isn't super useful when Ethereum's largest competitors by market cap are Cardano and Solana. This is because Cardano and Solana don't have a hash rate, so you can't really compare. They're not proof of work. So we're gonna have to do a little bit of a workaround for our research here. But first, let's do some defining. What is a hash rate, and why does any of this matter? So a hash, put simply, is a number that miners are fighting to find first. They essentially throw a ton of numbers into a math problem looking to solve it with brute computational force, and solve it as quickly as possible. So here's how you can think of it. I came up with the perfect analogy. Were you ever in math class and you couldn't figure out the solution to a problem on a test, so you just started punching in numbers on the calculator, kind of just guessing and testing, slowly getting closer and closer to the correct number? That's essentially what crypto miners are doing. They're just throwing a bunch of numbers at a function, trying to come up with the correct answer. Then the miner who solves that problem first gets to mint a block of transactions and gets paid for their efforts. Then hash rate is the total computational power behind a proof of work crypto network. So another way to think of it is the total number of guesses the entire network can throw at a hash problem per second. That is the hash rate. So if you have 10 computers who can all make 10 guesses at a hash problem every second, the total hash rate would be 100, 10 times 10. The total hash rate of a network can be very useful because it tells us two things. First, it tells us about the total resources being used to facilitate a network. These computers are expensive, the computers that solve hash problems. So the higher the hash rate means the higher the investment into the network, which means people are investing real money into that network. And then second, it means that miners have confidence in the network. They're choosing to use their resources on that network because they believe it will likely have a strong future. Now, going back to that article, that JPMorgan analyst said that he believes Ethereum's hash rate should be higher given its current market cap. So let's compare. So I pulled all the data that we need here. Let me go ahead and explain what we're looking at. Here we have a chart that shows the market cap and the hash rate of Ethereum Litecoin, and Dogecoin. The reason I chose Litecoin and Dogecoin are that they're some of the largest proof of work coins that have or can have smart contracts in the future. Litecoin already does, Doge may at some point. I can't use Cardano and Solana because they don't have miners, but we're going to be looking at those two a little bit more later. So you'll notice that this chart is in terahashes per second. 1 terahash is 1 trillion hashes. So you can think of this as 1 trillion guesses to solve a hash problem every single second. Not surprisingly, Ethereum has much higher hash rates than the other two, but what really matters is how it relates to market cap. So that's why I built this chart. In the blue, we have market cap, and the red, we have hash rate. That way you can visualize market cap to hash rate and see where that discrepancy is. So what this tells me is, yes, the hash rate to price seems to be much more healthy in Litecoin and Dogecoin. Litecoin and Doge are actually 10 times better in this department compared to Ethereum. However, I would like to argue this a little bit and have a counterpoint. So yes, hash rate is important, but Ethereum has plans to transition over to proof of stake at some point in the future. This means miners of Ethereum will be out of a job. Because of that, I believe many miners could look at Ethereum and they may like it as an ecosystem, but they don't want to be out of a job in the future, so they go ahead and just mine something else. So while hash rate is important and Ethereum doesn't look as good as these other two, we do need to look at it in context because there's other effects at play here. And because hash rate isn't perfect, we need to look at other metrics. So I've come up with 3 others: social activity, wallets, and transactions. So we're going to compare Ethereum, Cardano, and Solana in those other criteria. Now, before we hop into that, now is the time to join my Patreon if you've been thinking about it. And there you'll get my thoughts on the market in real time, buy alerts, a private community, live teaching on stocks and crypto, and much more. We still have a few spots available from yesterday's drop, so go ahead and grab one of those before someone else does. Now, the next metric that we're going to look at is total wallet addresses. This will tell us the number of unique wallets each cryptocurrency is held in. So I've excluded wallet addresses that have a balance of less than $1 for the sake of this, so it's not just fake wallets, if you will. This is kind of like the total number of users of a crypto ecosystem. But again, I should note that even this data is not perfect because someone can have more than one wallet address, and there's no way for us to know. However, it's still useful, especially when combined with all the other data points that we're looking at. So here is the chart. We can see the total wallet addresses right here. Ethereum has 46 million, Cardano has 2.3 million, and Solana just over 1 million. And if we look at the market cap ratio right here, so this is comparing Cardano and Solana in market cap to Ethereum. So the ratio for Ethereum is 1, of course, it's its own market cap. Cardano is 5.6 times smaller than Ethereum, and Solana is 8.1 times smaller than Ethereum. And then we have the number of wallets here, the ratio of the total number of wallets. So Cardano has 20 times fewer wallets than Ethereum, and Solana has 46 times fewer wallets than Ethereum. And then on this chart here, we can see the market cap and the total wallet addresses that have more than $1 of each ecosystem. Now, this data says a few things. It first says that the average Ethereum wallet holds far less than the average Cardano or Solana wallet holds. And of course, there are far more users of Ethereum than the other two. Now, a potential interpretation of this could be that the market cap for Ethereum has potential to go higher if current users increase their positions because there's so many more users there. What does this data tell you? Let me know in the comments because I'm open to ideas as cryptocurrencies are inherently very hard to value. Now let's move on to the next chart. This is the total real volume for each crypto. So the real volume is the total dollar value of all trades in a 24-hour period for each cryptocurrency, subtracting any possible wash trades that may artificially boost the numbers. So it's the real volume. Now this data is particularly interesting. So up here we have the real volume, and I pulled the average for the last 7 days. Ethereum is 7.4 billion, Cardano almost 5 billion, and Solana 3.2 billion. Now the market cap ratio, this is the same as before, market cap hasn't changed. Now the real volume ratio. So for the last week, Cardano has 5 times less real volume than Ethereum. Solana only has 2.3 times less real volume. Now, if we look at the data visualized, we can see where it gets very interesting. We can see that Cardano and Ethereum match up quite well. You know, their market cap and their transaction volume are fairly similar, where Solana actually has far more volume relative to its size. Now, this could mean Solana is set to grow even more, or it could mean that Solana is simply in an unsustainable growth period. But what we do know is that if Solana's volume stays this high for a long enough period, prices will go up. But of course, it's a coin toss as to whether Solana's volume can stay high enough, long enough for its price to follow. Comparing Ethereum and Cardano, it's hard to argue that either of those are undervalued or overvalued due to their similar ratios, which in my opinion is a good thing because it means relative values are on point. Now, the last data point that we're going to look at is the average Reddit comments per day on each project's main subreddit. Now, you might be thinking that this is a ridiculous thing to consider, and I would have to agree, but at this point, Reddit and other social media sites do sway markets. I mean, look at Wall Street Bets, so we need to consider it. Now, with each subreddit, we can gauge interest over time with relatively clean data. This is why I chose Reddit. But again, none of this data is perfect, it just helps build a more clear picture. So I extrapolated the average Reddit comments per day in each of these 3 coin subreddits, and then I put them onto a spreadsheet. Like I said, I spent a lot of time putting together all of this. So here's the data. We can see average Reddit comments per day for each ecosystem. Ethereum 613, Cardano 1189, Solana 1536. So Solana wins out here, and both of them are quite a bit higher than Ethereum, which is of course strange. So we have our same market cap ratio here, but then the comments ratio to r/Ethereum, we have double the comments on Cardano and more than double the comments on Solana versus Ethereum. And here is that same data visualized. Market cap to average Reddit comments. You can see this is the biggest discrepancy for Ethereum. Now, if we take all of this data into account, it's hard to argue that Ethereum has quite the buzz that these other projects have. Ethereum's closest competitors, at least relative to size. And this may be an indicator that Ethereum is losing a little bit of its dominance. However, as mentioned in the counterpoint of that article that this is all in reference to, Ethereum still has the network effect of being the #1 place for new users and new developers. People are typically first introduced to Bitcoin and then Ethereum. Now, other projects have already beat Ethereum in terms of ecosystem speed and efficiency, but no one is close to the size, at least yet, not counting Bitcoin. We're talking about network style cryptocurrencies. So priced into every crypto is the potential for growth. We need to remember this. The price you're paying today is a function of what every buyer thinks it will be potentially worth in the future. So if everyone slowly decides that Ethereum is replaceable and maybe won't keep the dominance that it currently has, then of course Ethereum's price will begin to correct. Can we say with certainty that it should drop by 55%? No. Of course not. And frankly, I'm not sure how anyone could arrive at that specific number without kind of guessing. I think we need to take all this data into consideration, but then add on the fact that Ethereum needs to get over to proof of stake as soon as possible, which they've been trying to do for years. In my mind, the way that Ethereum could possibly lose dominance is by taking too long to transition over and then allowing other projects to get bigger before they make that transition, and then it is simply too late. But right now, there's a big difference between first and second and third place here. If Ethereum was proof of stake right now, it would be hard to argue that any crypto project could ever touch it. But right now, other projects like Cardano and Solana have an opportunity to go ahead and grab some market share before Ethereum transitions over. And I'm not rooting against any crypto here. I hold many, many different coins, including Ethereum. I want the tech to become mainstream above all else, but I see where there's a small discrepancy in a window of opportunity for other projects to come in. The bottom line is no one knows for certain what will happen, but I can tell you it will at least be interesting. So what are your thoughts on this data? Do you think it's telling that Ethereum might lose some of its dominance, or do you think, no, Ethereum is just going to keep on continuing its trend, it's going to stay #2 or maybe even become #1? Let me know in the comments. And that's going to do it for today. If you like this presentation, make sure you just click like and you click subscribe. That's all I ask for. And if you want even more content, go ahead and join my Patreon, which is linked in the description. I would like to thank you so much for watching, and I hope you have a profitable day.